Hi, everyone. Just before we get going, I want to remind you that everything we talk about and discuss should not be considered as investment advice. The purpose of what we talk about on Catherine Murray Media and Markets on YouTube, as well as Catherine Murray in Conversation With on my podcast, should be viewed as informational and entertainment purposes only. Please definitely do your own research, your own homework, and definitely consult an investment professional before making any investment decisions. And also to note, some of us might hold positions in some of the stocks that we discuss. JC, great to see you as always, and you're such a fan favorite, that is for sure. This is, of course, JC Parets from All Star Charts. Let's just get going. And this is the top 5 of 5. Just remind everybody, we want to get your best top 5 ideas in 20 minutes. To keep everybody honest to time. Everybody's busy and efficient. So let's get going, JC. From a technical analysis perspective, that's your main driver in terms of stock picks today. So what's number 1 for you? We can start with number 5, by the way.
Well, I mean, I think it's important to really put things in perspective, right? About in terms of what type of market environment we're in. Because that's a lot of people fail to take that step, right? It's like, oh, should I buy this stock? And it's like, well, what kind of stock is it? What type of environment are we in? Are those types of stocks conducive to this particular type of environment, or are they not, right? And, I remember a month ago, people were like, JC, nobody cares about Brazil. These energy stocks are overbought because they were so focused on their growth stocks that were getting hammered that they're missing the giant elephant that was walking right past them, Catherine. And all these growth stocks are getting murdered, and Brazil's making higher lows, making new multi-month highs. It's like something's fishy here. And it made sense with crude oil breaking out to new highs, new 7-year highs, CRB index and commodities making new 7-year highs. There are certain stocks in this environment with rising interest rates that historically do well with rising rates, and there are stocks that historically don't. And the stocks that historically don't are not doing well at all. They've been doing terrible, those growth stocks. But energy, financials, now we're getting rotation into materials and industrials. I continue to like the relative strength. I mean, Brazil's been a monster winner for us. Anything energy related has been a monster winner for us. And then so that takes us to Petrobras, Petróleo Brazil. And, that's really where the top-down approach comes, because by the time we're deciding that we're buying Petróleo Brazil a month ago, for example, even though I think this is a big base, I think still has a long way to go. It starts from the top. It starts with, wow, everything's getting crushed except Brazil. What the heck is going on there in Brazil? Something funky was going on. So when literally the name Petróleo Brazil is petróleo is oil, Brazil, so like you're getting both. You're getting the energy and you're getting the Brazil at the same time.
And so that's one of your top picks. But JC, is that is it an ADR, or do you have to own it in the Brazil exchange? I don't know.
Yeah, it's an ADR, liquid ADR. It's a huge company. Yeah, you're good. I mean, it's not as big as it once was way back in the day, but the idea is that it gets there. Yeah, you're all right. Yeah, for sure.
What's the ticker, if you got it off the top?
PBR. It's a popular beer among the college kids, Catherine.
Okay, PBR.
I don't know when your last frat party was, but
long time ago.
Yeah, me too, unfortunately.
Okay, so PBR, Petrobras, and can you still get in? Because these stocks have had a huge run, anything with energy exposure.
I mean, think about this, Catherine. I mean, energy in general, you talk about something like Transocean, for example. It used to be like $150 billion company. Now it's 2. Right. So, I mean, this is just, I think that we're in the early stages. I mean, yeah. Has it come a long way in the last year? Has it come a long way in the last month? Of course, energy was the best performing sector in the United States, in the U.S. stock market in 2021. Commodities were the best performing asset class. Meanwhile, you had net outflows out of commodity ETFs for 2021. So, I mean, just hilarious. I think it's a long way to go. I think Petrobras for now, we could probably see 17, 18 bucks. That's probably next. There's some resistance there. But why can't this thing get in the 30s or 40s? Why not? I think it can. Not tomorrow, but I think we can get up there.
Okay, nice. What's your next one? What's your next top pick?
Well, I think getting back to sort of, sticking with what's working, energy, we talk about Petróleo Brazil in in Brazil and you're getting that exposure. You're getting Brazil and you're getting petroleum. Great. Latin American exposure, emerging market exposure. So if that's what you're looking for, that rotation, that's what you want. Now, there's something for everybody. Maybe you don't want to do that, right? Maybe you just want to buy the relative strength, the stuff that's already been working. Look at Chevron. Look no further than Chevron. Just a monster base, 7-year base. You know what we did, Catherine? 2 weeks ago, last week, as a matter of fact, it was last week, we bought, and you can still get in pretty cheap, we bought the 2024 January 150 strike calls in Chevron. So these are the 2-year out leaps. When was the last time you traded a leap, Catherine? But you know, we were getting it for $12. $12 for 150 strike 2024 calls. And this, what I loved about that trade is that it doesn't have to work right away. I mean, it's 2 years out. So if you acknowledge that energy has come a long way and you want to give it room to dance, if you will, but at the same time, if the answer to the question, if you ask yourself a question, do you want more energy exposure over the next 2 years? That's the question you want to ask yourself. Now, the next 2 weeks or the next 2 months, the next 2 years, do you or do you not want to have more energy exposure? For me personally, my answer is 150% yes. I do want more energy exposure, right? And this is a great way to get it.
And so where's the stock trading right now? Because I want people to understand a little bit more about what you're talking about in terms of, January 2024 150 calls. Maybe just describe what you're betting on there.
Yep. So you're about $13 out of the money. So you're about 137, 138. So these are the 150 strike calls. So you're about 12, $13 out of the money. And you're paying $12 for the right to purchase it at 150 at any point over the next 2 years. And we're not trying to exercise the calls here. We're just going to take profits on the calls, hopefully at a higher price, right?
Okay.
And then the strategy, Catherine, as soon as those premiums double, if they double, and I think the bet is they do at some point between now and the next 2 years, we take half off the table. Okay. Now we're playing with house money. We're playing with house money for the next, however long until expiration in January of 2024. So that's the strategy. That way you can sleep at night, especially if you have a big unrealized gain on the table that is leveraged through premium in the options market, knowing that you're just playing with house money, you can't lose any on the trade, allows you to stay in the trade longer, right? Because it's not just, hey, what do you think the stock does or the company? It's about dealing with your own brain, right? And this really, right? You know that. This really helps you do that.
Okay, I'm glad we went through that. What's up next? What's another one?
Well, I mean, we can stick with one more energy. I know
You're loving energy.
Well, I mean, what's there not to like? And there's a few different ways to take advantage of it. So one thing that I really, really like, this one comes from our Young Aristocrats report, and it really pays a nice, handsome yield. So for old school traders out there, they're familiar with the dividend aristocrats, right? And these are companies that have raised their dividends every year for 25 consecutive years. Think Coca-Cola, Johnson & Johnson, Procter & Gamble. But the way I look at it, or the way as a team we look at it, by the time they've raised their dividends for 25 freaking years, you're probably a little late to the party, right? You're probably not in the early stages of the company's growth, right? Obviously. So we like to stay a little bit ahead of the curve. So we specifically scan for companies that have raised their dividends every year for between 5 and 9 consecutive years. So the future dividend aristocrats, if you will. And Cheniere Energy is a great one. So Cheniere Energy LNG has been a great stock for us. It is the best looking energy stock on planet Earth, right? If you look at a million energy stocks like I do, none of them look like Cheniere LNG, right?
From a technical perspective.
I mean, they just look nothing alike.
Okay.
You know what I mean? Like this one really stands out. So that's like the outlier, to quote the great Max Gladwell. What's his name? Adam Gladwell. What was his name?
Max, I think.
Great book. So anyway, Cheniere LNG is the outlier in the energy space. But they have a master limited partnership, which is Cheniere Energy Partners, CQP. And it's a $24 billion MLP, and it pays a 5.4% yield and has raised their dividends. This is the 5th straight year that they raised their dividends. So if we're above 50, that completes that base. I think you can own it. I think it goes to 68, 70, and you're getting paid to own it. So you're getting paid to make money, Catherine. Who doesn't like to do that?
Yeah, and just, for our Canadian viewers though too, the tax treatment on MLPs, which is a benefit to American residents, doesn't translate to Canadians from a tax perspective, just to be aware. But we don't have to get into those details.
Well, I mean, I wasn't my decision, Catherine. Nobody asked me what I thought about that whole thing.
Yeah, right. I hear you. Okay, so so a number of energy companies. What's next? What
All
else
right.
do you like?
So, historically speaking, when interest rates are going up, what are the best two sectors historically that do the best when rates are going up? Energy, I think we covered that, and financials. Those are the two. There's an ETF, EQRR, which is the Equities for Rising Rates ETF.
Oh,
This is an ETF that just has a bunch of stocks that historically that should do well with rising rates. If you look inside those ETFs, which is something that I like to do for fun, you're going to find that more than half the entire ETF is financials and energy.
you're right.
Sense. So when you pull up a chart of the US 10-year yield and you pull up a chart of the EQRR, they look exactly the same. If you look at a chart, and then if you take the US financials index and the US energy index and you equally weight those two, that line also looks like the US 10-year yield and the EQRR. So if interest rates are going up, which has been the bet that we've been making, sell bonds, buy banks and energy, those are the types of stocks that do well. I like Morgan Stanley. It's a 20-year base. I mean, literally, this thing just broke out above its 2000 highs. Just did last year. And I mean, this thing can go a long way. So if we're above, 91 was the trade. I get that we're now in the 107s, but I encourage your viewers to zoom out. This is maybe a longer term sort of situation. Buying any pullbacks under 100, I think you need to flip the book to the long side. I think it goes to 150.
Wow. Okay. So on the financials, I guess, in terms of looking at the US 10-year yield, which, everybody's looking at today, hit 2%. You'd want to own the EQRR. That's that play.
Yeah, it's been working. I mean, it looks exactly like the US 10-year yield. I mean, listen, the ETF itself, I don't think it's very liquid. I'm more so using it for informational purposes. Like, we don't necessarily buy the ETF. Like, I like to use a lot of ETFs to track what's going on and then go inside and look inside of it.
Got it. Okay, because I was going to actually ask you who the owner is of the EQRR. But
I don't know. I honestly don't think it's very liquid. It's more so for information purposes. Yeah.
Okay. So to be clear, then it's really take a look at owning Morgan Stanley under 100.
Yeah. Okay. I mean, any pullbacks down there. I mean, I like it now. I mean, we're in it. I think it goes to 150. I think it's got a long way to go.
Let me ask you this too. I've got a couple of minutes left, but JC, when you take a look at the US 10-year yield, because there's just so much controversy and debate as to whether or not we really will see that US 10-year yield continue to move higher. If we get the 50 basis point hike in March, maybe it'll be 25. Nobody really knows, but we're really taking bets and creating themes based on where we think that US 10-year yield is going. So the question is, though, for how long? Because some people say, yeah, it'll get there, but there's no way the various central banks around the world can continue to raise rates, can't afford the debt payments. So I don't know where that comes into. I know technical analysis is where you're focused, so we're not really talking about a fundamental.
Jesus.
Thank God. Yeah.
I was worried about whether countries could pay their debt. Man, that sounds terrible. That sounds really boring.
I know.
You're on what's happening. Catherine, 3%'s a lock. 3%'s a lock. Take it to the bank.
Okay, US 10-year yield's going to 3%. That's what you're saying. Okay. And in what time frame? I want to understand the time frame here. Do you have any, can you see that at all?
Yeah, by St. Patrick's Day. Come on. No.
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 That's too soon.
And I'm looking forward to St. Patty's. No, I think, realistically, at this year at some point, why not?
Okay.
I mean, I have no idea. My crystal ball's in the shop right now, but when you look at the things that tend to do well when interest rates are going higher, things like financials, things like energy stocks, I think in my opinion, commodities in general, right? I think that's what's happening. And when you look at the yield curve that's just getting flattened like a pancake, or for you football fans, like a lineman, I mean, I think that the way those ones and twos just Like, I mean, man, I think what the 1-year yield is like where the 10-year yield was like a few months ago. Like,
Yeah.
I mean, I think the 10s are not moving as fast as the 1s and 2s and stuff, which is why the yield curve is flattening. But
Yeah.
there's no, but just because it's not going up as fast as 1s and 2s doesn't mean that it's not going up.
Right. Yeah. Well, and I'm just trying to understand like how long these trades might stay on for, but it sounds as though there's the momentum and the
And you know
technicals
me,
behind it.
Catherine. I like to just, really focus more on what the market would have to do to prove me wrong than I am thinking about Lamborghinis and mansions when I'm right. That doesn't help
Okay.
anybody. I'm more concerned with like, okay, let's play devil's advocate. What would the market have to do to prove that thesis to be invalid? And it was $84 in the crude oil. We held and continue to act well, number one. Number two, 1.7% on the US 10-year yield also held, and we've ramped higher from there. So,
Okay.
there's no reason to change those levels.
Okay.
Prior to that, the levels were 76 in oil and 1.4% on the US 10-year yield, and those held. They did what they did. We got more information. We readjusted those levels to 1.7 on the US 10s and 84 on the crude oil. Those held, but there's not enough information to raise those levels or change those levels. Those are pretty much it. As long as we're above 1.7 on the US 10s and above 84 on crude oil, there's no reason to think that whole thesis is not still intact. I got one more for you. You want to?
Okay, good. I want one more.
All right, we're going to go with Corteva.
Okay.
CTVA.
CPVA?
CT as in Tom, so Charlie Thomas Victor Apple.
Okay.
CTVA Corteva. It's an agricultural input stock from Indianapolis, Indiana. And, that cyclical trade of financials and energy has been working, but the laggards of that group have been materials and industrials. They really haven't kept up with the other two. And now we're starting to see that rotation this week. And this is right up in that materials alley. CTVA, if we're above $50, what's there not to like? I think you got another 30-40% of upside.
Okay, awesome. We are going to wrap it because you've got a hard out in a minute, but I do want you to say for 1 second, JC, what your offering is to people in terms of the different reports, different products that you have out there.
Yeah, no, I appreciate that. You could find us at allstarcharts.com, Twitter, StockTwits, Instagram, YouTube, at allstarcharts, and we provide research and actionable ideas to anybody who needs to put money in the market on a regular basis. This goes from individual investors who are first opening up, their first Robinhood accounts and learning how to trade, because we do walk through our process, as you and I did today, up to the largest financial institutions in the world, pretty much all the major biggest banks you've ever heard of, a lot of the biggest hedge funds that you're very familiar with, market wizards. So what's really cool is that I get to talk with, real portfolio managers that are putting hundreds of billions of dollars to work. And then I'm also talking to individual investors, and using both of all of those sources really helps me weigh the evidence and approach the market from a more holistic point of view. And that has proven to be really fruitful, and we're going to continue to do that.
Okay, awesome. JC, we'll leave it there. Thank you so much. Top 5 at 5. I appreciate that.
Always a pleasure. See you in Toronto soon, by the way. I'm coming.
Are you?
Yeah, I'm coming.
Okay, done.
Whenever the Dolphins are playing the Bills next season, the schedule comes out in April. That's the weekend we'll be in Toronto.
Okay, perfect.
All right,
Okay, we'll see you then.
Okay,
thanks. Okay, perfect. Bye.